Hello Wolfpack. As you guys would know, 28.6k is the critical level for Bitcoin, and the reason why I'm making this video today, it's not just for the sake of making a video, it's actually a very important video to talk about. We have closed just below 28.6k. We actually closed the last daily candle at around 28, well actually a little bit above 28.6k, but the point is the support zone was at 28.69, this one was at 28.61, the close is at 28.61, so we've just slightly actually closed below the support zone. And if we're going out and we're zooming out on a longer term basis, we can see that it's not enough to consider that a breakout. And this is why tomorrow is the big day, as per the thumbnail or the title in this video. I haven't decided yet because I'm making the video right now, but tomorrow really is the big day, because tomorrow, or this daily candle close we're on right now in 23 hours, by the time this video gets out, probably 22 hours, will determine whether this breakdown was actually a breakdown or whether it was just a wick of support that kind of extended a little bit too far, right? And we have a lot of indicators that suggest that decision time is coming very shortly, and tomorrow is the day. What we can see in the first and foremost of this chart is that we have a downtrending line. Let's go to the 4-hourly chart. We can see this downtrending line really start to take place, right? We are compressing heavily against this support zone at 28.6k. The lows are the highs are getting lower, right? So we're bouncing, compressing, and you can see we're very much running out of time now, right? We don't have much time to just keep bouncing around in this range. We have to make a move either up or down, and this is why in the next 23 hours I think we'll be seeing that move, and by tomorrow's daily candle close we will be sure of what the short-term direction is going to be. Let's go back to the daily chart, and we can also see that that line is still there on the daily chart. Let's look at something like the Bollinger Bands. Now the Bollinger Bands are basically two bands, the center line being the 20 SMA and the top line being two standard deviations above that, and the lower line being two standard deviations below that. And we can see that when these things compress, it generally means that a big move is on the way, and they are compressing, they are tightening very sharply. It means the range, the price range for Bitcoin has decreased significantly. There is intense compression, and just like when you're in a swimming pool and you hold a beach ball under the water, when it comes out, it doesn't just come to the top, but it also bounces out. That's what we're seeing right now. So we're going to see that bounce, whether it be up or down, very, very shortly. And the evidence suggests, as per yesterday's daily candle close, which was just below support, that close will be happening in 23 hours, and that will determine the next move. So tomorrow is very much a big day. What do we need to do tomorrow? Tomorrow, or on this daily candle close, I should say, we need to be closing on Bitcoin above 28.7k to confirm that support zone is still held. And if we do that, there's an abundance of reason to believe that we will be bouncing from there to at least 33k. What is the reason? Well, first and foremost, we have bullish divergence in the RSI. Right, we've seen a bullish MACD cross, and we're on support with sideways volume. The volume is not very significant at this point in time. It's kind of just going sideways with no real uptrend or downtrend. But when you have even volume on support, generally means you're going to bounce, especially when you've head down into that support sharply. So there is a lot of reason to believe it's going to go upwards. However, if we close the next daily candle close below 28.6k again, or should I say lower than the last red candle we had on the daily chart, that would be a clear confirmation of a full breakdown on Bitcoin, and the next support zone, the next level of support we see actually is coming all the way from 24k. And so if we close, again, I'll say this very clearly, if we close this current daily candle below 28.6k or lower than the last daily candle close, we will be heading on Bitcoin to 24k, and there is very, very, very little doubt in that statement. That is the objective reality of the situation. There is no support between those two regions, right? And if we're looking at something like the stochastic RSI, we can see it's actually topped out already, which would suggest that, hey, maybe that's going to happen. We do know the longer term charts don't look very good as well. But let's move on Bitcoin. So we know that, again, close below 28.6k, we're going to 24k, close above 28.6k, and we'll probably be bouncing to at least 33k or maybe even higher. All of this is going to be decided in this current daily candle close. A very important 24 hours for Bitcoin. I can't stress that enough. So moving on to the traditional markets here, we've got the S&P 500, which obviously is the top 500 US companies by total market capitalization. So we have this actually moving to the upside in the last 4 days from that support zone. We've got a downtrending support line, which we bounced off on 3 separate occasions. You could say 4, but I'm going to say 3 separate occasions, here on January 24th, here on February 25th, and then also here in this region between May 11th and also between May 20th. So we've bounced off of that in the last 4 days. And as you guys would know by this point, when the S&P 500 goes up, generally speaking, right? This is general, it's not every time, but you can say around 70 to 80% of the time it's going to lead to at least a shallow bounce in the cryptocurrency markets, right? But what we're actually seeing is a slight deviation from this. And this is very interesting, and it may be for a few reasons. One of the reasons it could be because Bitcoin at the moment is already dramatically moved recently, right? It's moved down. I mean, it moved from 39K all the way down to 24K in a matter of 5 days. So it might be exhausted. And when there is exhaustion in the market, it does kind of lead to a bit of differences between the usual trend in the S&P 500 and Bitcoin. But as of right now, it is interesting to note that, hey, in the last 5 days, Bitcoin's actually been deviating from the trend in which it generally follows the traditional markets. And so that's an interesting thing to just keep an eye on at this point. Now, what I would say is that this is a standard bounce for the S&P 500. Do I think this is going to lead to a full recovery? Not at all. I mean, if we're looking at the macro situation, it's abundantly clear that the S&P 500 is in a very bearish structure. And all we really need to do to look at that is something like interest rates. Interest rates are on the rise here. They're showing no signs of slowing down. We've had the Fed minutes recently, and they are basically suggesting they're going to keep raising by 50 basis points at least for the next few months. And we've got bond yields returning to levels which we haven't seen since June or July 2019, which of course is when interest rates were up here at 2.5%, right? So essentially, interest rates right now are at 1%, and we've seen bond yields. The market's essentially saying, hey, it's going to go to at least 2.5% under the current market structure. And so interest rates are dramatically undervalued, which obviously will lead to in the future, it's almost inevitable, interest rate rises, which will lead to increased tension. Doesn't mean it needs to go down necessarily, but it's going to lead to increased selling pressure and increased tension on the traditional markets, which generally speaking does mean it goes down. And as we do know, the trend is traditional markets go down, Bitcoin goes down, and vice versa. But as of right now, I just wanted to point out that we have that slight deviation, which is interesting to keep an eye on. Obviously, the thing with Bitcoin is that we've never seen a recession on Bitcoin, right? We've never seen a global recession on Bitcoin. It's only been around for a certain amount of time, for which we've never actually seen a recession during its lifespan. And so we don't necessarily know from historical data how it's going to react during a recession. And the interesting thing about that is, if you think about it, if you look into everything we do here in technical analysis, everything we do is based on historical data, even down to the bare bones, right? The triangle formations, the channel formations, all of this kind of thing. It's all based on historical data. The only reason we know it's going to work is because historically it has a success ratio, right? For example, symmetrical triangle formation in a downwards trend breaks to the downside 70% of the time, right? We only know that because historically that's what's happened. And so that's an interesting thing to keep an eye on, just a slight deviation for what I just pointed out there. But if we're moving back into the Bitcoin charts, 4-year cycle, talk about it every video. You guys know damn well this is, it basically predicts, based off the halving, that every 4 years is going to be a bull market, 3 years in between is going to be a bear market, and it's saying we're going to bottom out around November on Bitcoin. It doesn't have to be November, essentially doesn't have to be November exactly, but it can be around November. So give or take a couple of months. It is a rough trend. It's only based on 3 data points, and so it's not very precise at this point in time. But that is one of the methods I've used to predict the top on Bitcoin within 10%. One of the first people in the market to do that. And so we're moving downwards quite rapidly towards a 200-week SMA now. And if we go ahead and delete all of the indicators, right, besides the 50-week SMA and the 200-week SMA, what we can see is a very clear trend in which every time we lose the 50, we end up over 200, right? We've seen that on 3 separate occasions, and right now we're seeing the same thing, and I see no reason why we won't end up over 200 after this trend continues until it ends, right? So what I need to be seeing on Bitcoin, I said it every video, I'll say it again, right? What I need to be seeing on Bitcoin is a break above the 50-week SMA. At that point, I will start to consider the market bullish again. That's at 44K. If we can't get above 44K, it's going to be a downtrend until we reach that 200-week SMA. And then when we get to the 200, we'll need to see how it reacts to that level. And then we can react by either purchasing or waiting a bit longer and seeing if we actually drop below that. Because again, going back to my original point just a few minutes ago, we've never seen a recession on Bitcoin. We don't know how it's going to react. And so there is a chance that we break the trend of bottoming out on the 200-week SMA and go below it. But we can't predict that at this point because, as you guys would know, invest with the trend until it ends is the #1 rule of investing. And we haven't ended the trend yet. So we have to assume it's going to continue. So at this point, the most logical thing to assume on Bitcoin, in my personal opinion, is we're going to go downwards towards 22K within the next probably 5 months here. But could be a lot sooner, could be a lot later. Who knows, really? Bit of a rough trend. But moving onwards, and this is an interesting chart that I haven't looked at too extensively. some of you might recognize this chart. I talked about it a few months ago here, and it's also talked about on some of the bigger channels as well. It's a pretty well-known chart at this point. We are following the 2018 structure quite perfectly, and this is a chart that you could use to argue there's going to be one more dead cat bounce. So obviously we're going to find that out tomorrow. As I said, close below 28.6, we're going downwards. Close above 28.6, we're likely going to see a dead cat bounce. This is one of the charts that would be used to kind of predict where that bounce might take us. It's very optimistic, however, it does make sense. In 2018, after the bull market top, we jumped down and we formed this uptrending trend line, right? When we finally lost that trend line, we saw one final dead cat bounce up to that trend line, rejected off the 200-day SMA and that trend line, and then consolidated and crashed, right? In this cycle, we're doing a very similar thing, a very similar structure. Whether it will be invalidated or not is the question, right? We saw the bull market top, we formed an uptrending line, we've dropped below it, and now we're in the region that we saw here in 2018, right? We were kind of in that consolidation region just after dropping below it, and as per 2018, it might be expected that we need to do one more dead cat bounce up to the 200-day, wherever that may be, probably around 40K, and then a rejection, and then we see the final drop in November. So, you know, there is a decent amount of reason to believe, based on this chart, that we could be seeing one more dead cat bounce. I think we'll find out tomorrow. And this is the most optimistic scenario based on that dead cat bounce. So dead cat bounce would say, hey, let's go to like 42K or 40K. It's very hard to say where it's going to be at this time due to the fact that the 200-day SMA is a moving indicator, but it would be targeting the 40K region. And just be aware of that, because if we do start moving up rapidly and you start to worry, oh, maybe I've missed the bottom, that's not really a logical thought process to have, because we do have this trend that suggests that, hey, we'll probably see one more dead cat bounce. I don't know. I'm not going to make any assumptions based off of that. I think we'll find out tomorrow. I don't care about making predictions about the short term at this point. Longer term, even if that happens, we're going down to my target, and so I'm going to stick by my target. I don't care about shorter term price predictions. Moving forward a bit further, what you can see is the monthly chart. And the monthly chart, we have the 21 EMA, as you guys would know already. I've talked about this quite a bit as well, is kind of a critical indicator. The monthly candle close will be in about 3 days, just over 3 days, right? Coming on 4 days. And we can see that every time we've interacted with the 21 EMA, we've seen a massive price movement, right? We lost it here, massive price movement. Gained it, massive price movement. Lost it, massive price movement there, right? Same thing over and over again. Basically, every time we interact with this line, we see either a massive pump or a massive dump. And we have obviously lost this line. And unless by some stroke of, miracle or whatever, we get above 37K within the next 4 days, we have lost that line again, and we can expect dramatically negative price action to ensue because of that, right? I do want to talk about the RSI on the monthly as well. The RSI on the monthly is saying that 44, right? The number 44 on the RSI is likely to be the macro bottom. We saw that in both 2015 and 2018. We are at 47 right now, right? And so we're getting very close to that monthly RSI line. And this would be somewhat of a reason to maybe think that, hey, maybe we need to see one more dead cat bounce to kind of reset this RSI a little bit, so then we can come down later in the year and bottom out on it. I don't know, but the point is, as of right now, it's very 50-50. I think it's about a 50-50 chance. Maybe we drop, maybe we see a bounce. And if we do see that bounce, as I said before, it's not a reason to just jump back in the market blindly and think there's a renewed bull market. It really is a reason to be extra cautious. Try and get some profits on altcoins, try and get some scalp trades in there. But ultimately, it would just be following the plan, right? So don't be surprised if we see a bounce here. It could happen, but ultimately, I think tomorrow, and particularly the next few days, we'll decide which scenario is going to play out there, and then we can analyze that scenario as it comes along. But before we end the video, I do want to talk briefly about BitGet. I want to talk about the crypto. I want to talk about the Crypto Academy, and I want to talk about Wolf's Crypto VIP. So if you click that join button right below this video, go to the channel page and click the join button. You'll gain access to VIP membership, through which you can gain access to one altcoin trading signal every second day, prioritized reply to comments, a 2-hour video on market psychology, and a weekly newsletter. The altcoin trading signals have been extremely successful. In the last 4 days, we've pulled up cumulatively about a 100% profit on altcoins, while the entire market has trended downwards. Obviously, very profitable there. 4 trades popping off very nicely. Go ahead and join that up. It's only 28 USD a month. Absolute bargain for what you're getting for it. BitGet Exchange, one of my favorite exchanges here, I use alongside Binance. preferably, well, most of the time I use BitGet to actually trade futures, because in Australia, there's a lot of regulation around futures, and BitGet kind of avoids that regulation by offering no KYC, lowest fees in the game, even lower than that of Binance, and multiple, I'm talking dozens of spot pairs available on BitGet that aren't available on major exchanges like Binance. I use this for trading basically on a sub-daily basis, I would say. And then moving on even further, the Crypto Academy, if you want to learn how to trade during the bear market, take advantage of the boring price action, take advantage of the fact that the market is going down. You can learn how to trade through Become a Trader, a 10-unit course made by myself and my fellow friend and analyst, Mega Crypto. We developed this course over the last, I'd say, 5 months. It's released only recently, about a fortnight ago. It came out fresh into the market here. You can learn about fundamental cryptocurrency concepts, market patterns, indicators, patterns, everything you need to know to have the potential to form into a profitable trader yourself. So this is a little bio on both of ourselves here, Mega Crypto and Wolves of Crypto, obviously. And then if you go down to the bottom of the page, you can see our contact information to email us about the course structure, what it looks like, the format, and obviously the payment information as well. So without further ado, I'll end the video there, guys. Thanks for watching a lot. Hope you enjoyed, and I'll catch you in the next one. Cheers.